name is Liz Lenahan, and I'm here with Crystal Morgan today to discuss personal credit reports. Hi, Crystal.
Hi, how are you?
Good. How are you?
Good.
So, as a small business owner, how can I find my personal credit report?
You can find your personal credit report in a bunch of different ways. Freeannualcreditreport.com is an option for everyone to use at least once a year to get a copy of their credit report. However, I always suggest that people check it on a monthly basis to see different changes, what they can improve on, and things of that nature. I personally suggest Experian because it explains a lot and it has a lot of different features. But that's not the only one that you could use. Credit Karma also has one as well. And there's so many out there. And a lot of times, your credit card company will also provide an app as an extra bonus. And then you may have to pay for extra features. But it's always great to check out each and every credit bureau to ensure that you're able to pull your credit report. So TransUnion, Experian, and Equifax.
And what is a credit report?
A credit report is whenever we use our name and social to apply for credit, what it does is it lists everything that we have received extended credit for. So it'll put anything like mortgages, short-term loans, long-term loans, anything like that that we use our social security number for to obtain credit. Everything is listed on there. And a credit report also lists as well any addresses that you may have had under your name and other details. And it also gives you sort of like a forecast for how you're doing. So it'll tell you that you're maybe doing great in your utilization or not so great. So it gives a ton of information, but don't ever be afraid of looking at one. Always seek out a professional to help you read it if you have a copy of your credit report and some things are very confusing to you. A credit report will also list how well you're doing with all your debt. So it'll say if you're having any late payments or if you have went above your limit. It'll list all of those things right there on the credit report. So again, reach out to any professional. Specifically, I always suggest Parachute Credit Counseling Services because they're a credit counseling service that helps clients to see and review their credit reports.
What do lenders look for when reviewing my credit report?
So typically, what lenders are looking for is to see any outstanding debt that you currently have. Once they review all the outstanding debt that you currently have, they'll see the standing of it. So, is everything on time? Are you under your limits? And things of that nature. So, they check the activity as well as what's listed on the credit report. They look at the credit score, but here at Pursuit, we also take a holistic approach to see if the score is a little bit lower, what made it lower? Was it a one-time occurrence, or is it something that we could have a deeper conversation about to improve? So lenders generally look for if you already have a good habit of paying things on time, handling credit cards appropriately by being 20% utilization or below, and they look to see if they could also feel comfortable with being added to your list of creditors, and also is if extending credit to you will be helpful for you or more harmful.
How do I fix the negative items that are keeping me from getting approved for a loan?
Typically, the best way to get those negative items off of your credit report is for one, reaching out to the creditor, finding out if anything was an error, and if there were no errors and there was actual negative activity, I would suggest asking them how to fix it, either going forward or how you can fix it and what your options are. Also, I would say to fix negative items is also speaking with a credit counseling service to find out what can you do as an activity to improve upon how you handle each debt item.
What is a personal guarantor, and do I need to be a personal guarantor for my business loan or line of credit?
Yes. So to answer that question, you do have to be a personal guarantor for your business loan or line of credit. I would explain it to you in this way. You have to be a personal guarantor because you are the owner of your business. And what a personal guarantor is your business is getting the loan to cover business use. However, the business itself is you. So the entity is represented by you as the owner. You as the owner and your activity, credit, and cash flow is very important in determining if the loan can be paid back. The method of being paid back is through you as the business owner and you as the vessel. Being the personal guarantor is very important so that we could come to a decision on if repayment is possible for you to receive the loan and for the business to get the funding that it needs.
Is it a hard inquiry or a soft pull when Pursuit runs my credit report? What is the difference?
So Pursuit does a soft pull of credit, and the difference is how it affects your credit score. So when we run your credit and do what's called a soft pull of credit, it will stay on your report for up to 2 years. However, it does not affect your score. A hard pull of credit is when it does affect your score because typically those who use the method of doing a hard pull is also alerting other creditors that you have inquired about extending yourself a little bit further with additional debt. So it's very important that you are aware of the two, and with us, a soft pull, as well as other institutions, they use that method because they simply just want to get your credit score and your credit report.
Is the credit score that lenders like Pursuit require for loan approval?
Course. So for credit scores, Pursuit likes to see clients with a 640 or above. A credit score of 640 or above shows that you have been responsible in paying previous debt that you have had for yourself or for the business. But it also shows that although you were not absolutely perfect, because a perfect credit score is about 850, I would say that a 640 or above shows that you may have had maybe one issue or the other. And so Pursuit has flexibility because we do understand that running a business is very difficult. We do thankfully have a Western New York small business loan fund that is awesome, and it helps clients with a credit score of at least as low as 580. So it's very important to understand what those different scores mean. And typically for most other financial institutions, they like to see a 660 or above.
How do I increase my credit score?
The best way to increase your credit score is to use credit cards for smaller purchases that you know that you can pay back within 30 days at least, and keeping that balance at least at a utilization of under 20%. So be very mindful of how much you use your credit cards. Although you have a limit that was given to you, every creditor looks to see, are you managing that in a healthy way? Another way to increase your credit score is to pay every single obligation that you have on time. Always pay it on time. If you find that a due date is not going to work for you in the upcoming future, it is best to reach out to that creditor to see if you can make any adjustments. If you cannot, with the list of creditors that you have, see if there's another bill that you're able to move the due date on. You doing that will help improve your credit because it'll make it so that you're able to make the proper adjustments monthly and you don't get those late markers on your credit report. Another way to increase your credit score, is to ensure that you don't over leverage. So, what we tell a lot of our clients is sometimes refinancing debt is a really good idea. So, if you notice that you have a bunch of different loans with different interest rates and they're in the higher range, a lot of times refinancing that, which means paying the balances off and closing certain accounts. Having too many trades is also just as bad as not having any at all. So I would say ensure that you have a very versatile trade line, meaning you should have installment loans, revolving credit, mortgages, and different short-term loans or revolving lines like a line of credit. Those are also very helpful because it helps show that you know how to maintain different types of debt in different ways with different due dates, and it shows that you know how to manage your finances correctly.